And good afternoon, everyone. Let me put the video on. Yeah, thank you, Shireen, and good afternoon, everyone. I see that we're running late, so I'm going to be gentle but brutal in terms of managing the times to be allocated for each speaker and, of course, the discussant. We have a very rich session with 3 papers by prominent economists in the region, and I'm happy to chair this session under the title GCC Monetary Policy, Prices and Finance in the Wake of COVID-19 Pandemic. So, may I ask Dr. Sayid, Abbas, Ahmed to take the floor. After I briefly introduce you, you hold a PhD in Accounting and Finance from Bath University in the UK. You entered back in 1987, and you're currently Professor of Accounting and Finance at Jazeera University in Sudan and Ajman University. So with such an introduction, I give you the floor to take us through your paper, noting that I'm going to give 12 minutes for each speaker on the agenda, including the discussant, 12 minutes. And Dr. Sayid, I saw that your presentation has 29 slides, so I propose that you skip over some of the slides and maybe consider skipping over the literature review slides, just so that we can manage the time and give enough space for questions and answers after the presentations. Thank you very much. And Dr. Sayid, you have the floor, or the screen, if you will, please.
I don't see him.
No, that's not you, Ahmed. Ahmed, you're the last.
No, I know, but I'm not seeing him.
You're not
Dr.
seeing him.
Said is our panelist on the panelist list. He's muted. Dr. Sayid.
No audio, no video from Dr. Sayid.
No, no audio, no video, but he's around. So don't know if you want to start with the next paper.
Maybe I'll start with Ahmed since he projected himself. Ahmed, why don't you take us through your paper about the CPI in Dubai and in COVID and a post-COVID economic environment.
Okay.
Raed, we have to thank Ahmed Ashan with the time difference. He's been up all night to make it time. So
yeah.
I remember that in due course.
Okay.
Yeah.
So go for it. You have 12 minutes from now, please. 12 minutes.
Well, let me rush then. I would thank you so much to everyone for giving me the opportunity to tackle this issue. I've been thinking about it since the coronavirus, and then since I've been working on prices division for a while. Then I said to myself, what will happen with all the lockdown and the change in consumer behavior and ultimately the weights? So what will happen with consumer price indexes? So that's why I look into this issue, and then I'm going to go through a few things just to give you some introduction, just what motivates me to do this, and then I'm going to tackle the difficulties or the issues with respect to price collection, weights, imputation, and the choice of the proper CPI formula. And thirdly, I'm going to talk about some international practices, so we can learn from them. At conclusion, then some recommendations for future consideration. Now, we know that I wrote this paper for Dubai Statistics Center, but it could be applied to any statistical agency in the region that update its basket every year. So this is very technical paper. So I didn't take that much from the Dubai Statistics Center, except the weight which is published anyways to anybody. So What I'm just saying, you know, this is can be applied to anyone. And then the models I proposed, we can experience those for other countries as well. So CPI is wisely used as a measure of inflation or a cost of living. We don't want to say, oh, is it for escalation? Is it a cost of living or whatever? We will leave that for later. And it measures the average change of a basket of goods and services and kept constant over time. That's the issue. When we talk about the basket, because we're going to build up weights from it, and weights change in the area pre-pandemic and the post-pandemic. So that's what's going to make a big difference with respect to the CPI bias. Most countries use the fixed basket approach, and this is the law index. Like the Canadian use the law index, which is a Laspire type index formula. Some countries use direct Laspire, such as Japan and Germany, but most countries use the law index. The law index means that there's a fixed basket, but it doesn't have to be the base. It doesn't have to be the basket year. It could be the following year, but it's still a fixed basket. And to construct the index, we need weight reference period. So even if we collected data for the family, the survey of household spending for 2015, that doesn't have to be the reference year. We can just move it to the following year or a year after. So that's the whole thing about the law index. Why is it different from a direct Laspire index? Any drastic change to spending in the consumer price index, it caused some biasness in the rate of inflation. And that's really what happened during the coronavirus. Now, so a CPI, the most effective economic measurements with sudden change in consumer behavior. Like what's happened now with the pandemic, this is diverted the consumer price index heavily, and it caused lots of problems. And that's why we're going to walk through them one by one. COVID-19 is the first pandemic since the Spanish flu. But guess what? This time, this happened during an information era. And the information era means a lot to us. That means instead of looking into the way of a traditional modality of collecting prices, then we can collect prices using other approaches. And then we're going to talk to that when we come to collecting prices. So, the pandemic itself brought prices to the center of attention again. And the spending patterns changed abruptly, and some of the products disappeared, some outlet closed, online shopping surged, and pre-pandemic CPI weight became obsolete. So if we want to use, say, for example, the 2015 basket that was collected by Dubai CPI, then we're going to have a problem, despite the fact that they got the 2019 basket. Now, the gap between the actual inflation and the actual inflation and the perceived one, it become more pronounced during COVID-19. And that's what makes lots of people think, why is that? So if you look at it, you say, oh, prices are going up. When you look at the rate of inflation, no, it is not going up. This is will leave a macroeconomic outcome, and it could be a sign of measurement error for the CPI. And so most consumers don't believe that the CPI, the official CPI published by most statistical agencies, is not reflecting the official or the true official CPI. Now, let me go quickly. So we have issues. Data collection, there's a problem. Weights, we have a problem. Imputation, and then the formula itself that we choose. You know, in CPI, we have over like 15 different formulas. What should we do when we calculate the index? And so we need to collect timely and quality data, especially right now. And the old way we collecting data face-to-face is no longer valid. We have to use other ways to collect data. And the new collection methods data sources will be the key to the future. Now we're going to think about collecting data from credit and debit card transactions and issues like that. This is going to be the future for price indexes. So we are no longer going to go face-to-face to collect price data. Look at this example, for example, for the US. Below 65% of prices collected. So this is very low. Why? There's some restriction on the movement. There is no face-to-face collection. Okay. Establishment closed, such as recreation, services, cinema, theater, sporting events, among others. Also, products disappear, like food outside, when you're eating outside. All these issues disappear. Look at what's happening. And we are collecting price indexes from all these sorts of activities. If we compare the CPI, the weight 2019, the data collected in 2019 to 2020, if you look at it, face-to-face in 2019, it was 86. Now it went down 2020 to 66. Look what happened. Personal visit in 19, 66. 20, 0. Telephone, 9. So there is a big change in the way we are collecting data. So what are the alternative way? Alternative way, we should look into telephone, online prices, big data, web scraping, and scanner data. These can all be options now to replace the face-to-face interviews. So using these modes may lead to difficulty in ensuring a minimum average of all products coverage. So the way
you have 2 more minutes, so please move to the main points, please.
The main conclusion?
Yeah. So what is your message behind this?
My message is that we're having a problem with weight. Weight has to be updated, okay? But how should they be updated? There is a Canadian model here that they are updating weights. Now they're creating new weights. Another issue is the imputation. We should not impute, for example, the old weight. Look, so these are the Canadian weights. Look at the shoveling. Some of them, they went up, some went down. And now what I'm talking about, I calculated this data. Look at the Canadian, and with using the new weights from transaction data, the Canadian weights have changed, the US weights have changed. So ultimately the CPI have changed. And what happened is the COVID inflation is higher than the official CPI. And that's what we meant, is that we really have to update the weight using transaction data. Now, with respect to imputation, you cannot do imputation. The Consumer Price Index manual that's provided online for all statistical agencies is valid for sure, but in normal time. Now we are not living in a normal time, so we have to impute differently. And I came up with a set of proposals for all statistical agencies. How should they impute weights, whether the items are there or they disappear? Now, the most important thing I'm going to concentrate is the formula. The problem with respect to constructing the price index, it is not only the weights. It is weights, imputation, collection, and the choice of the right formula. Like say the Americans, look, the Americans, they're using the super relative price index, which is the Torkwitz, that take care of weights in the beginning and at the end. So the base and the current year. And then it is test, okay, satisfies time reversal. So if we switch quantities back and forth, it satisfies the time reversal. So that's the American one. And then they share it monthly. So that's a good one. But it's very expensive because they conduct their weights every year. No country can afford that, but the American themselves. Now, for small countries, say like Dubai or whatever, I suggested to use the Swedish model. The Swedish model is more flexible. It allows you to revise more. Secondly, it does the average on annual basis. It's not on monthly movement. And that means that even if there is seasonality, it will disappear. Also, they don't link in December. They link in other months. So the Swedish model is ideal to tackle the COVID-19. The details are on the paper. The paper is written. One model that I suggested is using for a fixed basket like the one in Dubai is to put basket in the middle. What do I mean by that? Say if they have a basket for 2020, take 2000 years back, revise the index, and 2 years forward to put basket in the middle. Putting basket in the middle will get rid of this issue. But don't forget, for the 2 years where we had the pandemic, you have to look into the weights. And then I gave all the years, what should they do up to 2027. Now, another issue, if possible, Dubai Statistics Center may try to get a basket or to form a basket for 2021, and that will solve the problem because prices constructed for 2021 and 2022, they will be based on a 2019, and that is not, and that's the year was followed by the corona, and that's going to be a problem. And I think I would suggest that they have a basket for 2020. Now, okay, just 1 second. These are all the details. For some, the Canadian international practice, the Canadian, as I said, they use a multi-price index. They have a chain price index, but if they use a token such as the American, then that would even be better. But as I said, it is very expensive. Now, another issue is, well, this is also an exercise I did, and I found that the COVID prices are way higher, or inflation is way higher than the official CPI. That's a big issue, and this data was obtained from transaction data. So to replace that, even look at this chart with respect to many countries, all countries. CPI, COVID CPI is always higher than the official CPI. So we have to look into that. Conclusion, let me conclude. So the CPI is an essential tool for policy implication. And that's why we have to really be careful. When we construct it, we have to make sure it is meaning, it does have a meaning, it is timely, and it has a quality. We don't have to look into upper biasness. We cannot look for other issues or other problems. Consumption pattern, this basket that we're using now are not representative of the CPI. Also, measure the CPI of countries. So many countries, because I cannot see, many countries updated their weights. What they do is they use the average weights, and then they correspond it to the expenditure category, and then they normalize that. That's the Canadian model. If we can do that, that would be another option. A supplementary index, I think, would be a good idea. Always a CPI beside the official CPI to see how they move and make some analytical series or research to see the difference between the COVID CPI and the official CPI. And okay, some recommendation. I think Dubai Statistics Center may want to cooperate with Smart Dubai, and that was would be a very good idea. They can obtain transaction data from credit card and debit card. Also, they can explore alternative price measurements by constructing different CPI based on different formulas, such as super relative indexes. And those super relative indexes, they address the issue of the coronavirus pandemic, like Torgovich, Fisher, and Walsh. I'm not advocating Edgeworth Marshall, but Walsh, the three of them are super relative. Using a last fire index, by the way, Statistics Center may be a problematic unless we use a mid-term basket, especially now. And I think that could be an issue. Also, CPI weights have to change. Most countries allow 5-year rebasing, but this doesn't work during a pandemic time because this is going to be very problematic. 5 years of rebase, that's another issue. We recommended that a special 2022 household budget survey by the Dubai Statistics Center will solve this problem and will put a basket in the middle, and then we can move forward all the way to 2027 without any problem, no matter we have a pandemic or not. Now, if this is not feasible, household budget survey for 2021, there would still be a merit in adopting the middle basket approach. For 2024 one, there should be an adjustment of the basket share of categories sensitive to the pandemic. That's why with the upper level, if you see prices are going up with respect to transportation, food, because food is going, transportation is going down, all these sensitive commodities and services, you really have to evaluate. And also you have to be very transparent to the users of your data, or otherwise it will be misleading. So the construction of consumer price index, we have to really be very careful. Many other Western countries, they done a lot of analytical series for the CPI, and they looked into weights using different methodologies. They use different formulas, and that's what happened. If we stick to the direct classifier formula, we will be lost for some time. I think, Dr. Raed, maybe I run.
Yes. Yes, I wasn't brutal enough. Thank you, Ahmed. For those who don't know him, Ahmed is a very, very committed statistician. So this subject is very close to his heart. Now, I have a number of comments because I didn't manage to get you to finish within the 12 minutes. It actually took 20. So I move directly now to this to see if Dr. Sayid is with us now, or should I move to Salim, Dr. Salim? Shireen is not answering, so.
I'm here. Dr. Sayid is still on, يا رائد. بس يعني Dr. Sayid, he's muted and no camera.
Okay, so why don't I call on you, Dr. Salim, to please take the floor. Ahmed, you should stop sharing the screen, if you will.
Oh, okay, sorry.
All right, and I welcome Dr. Salim Al Hajiri, who's an assistant professor of management information system at Al Sharjah University in Oman. It's a pleasure to have you here and to meet you online. And I give you the floor, Dr. Salim. You have 12 minutes, please.
Thank you very much, Dr. Raed. I will start just because I'm trying to load. I think that's now loading. I've got another completely different slide. The slide is not loading here with me.
So someone, Dr. Sayid's
I think Dr. Sayid's
up on the screen.
Yeah.
That confused me too.
Yes, yeah, you're right.
So we want Dr. Salim's presentation, please, to be.
Good afternoon.
Okay, so Dr. Salim, please excuse me. It seems that Dr. Sayid is now online.
No worries.
Now, thank you very much indeed. Can you get me, the chairperson?
Yes, I can hear you, and I think everyone can hear you. So please proceed. And since I hope that you were able to hear my introductory remarks when I suggested that you may want to consider jumping over some of the slides, because you have 29 slides for a 12 minutes presentation. So please go ahead and try, and I'll try and when you hit the time constraint. The floor is yours, sir.
Thank you very much indeed, chairperson. I would like to send my word of appreciation to the Economic Research Forum and to my colleagues, Professor Fatma, Dr. Shireen, Dr. Faiza, and my colleague that is co-author, Safiyat, and on the occasion of the Women's Day, and also all the women participating in this forum. Hoping that we are going to make some sort of real change coming from going for the road of the recovery. Our paper on trying to build relationship between the financial structure, lending capacity, and bank performance in the emerging market of taking the United Arab Emirates as a case study for this one. Usually, if you go for this sort of research, we need to answer a number of questions. That is a question of what we are going to research in addressing the theoretical background and the practical justification for this paper, and the question of how we are going to explore or to investigate this problem, and again within how, that is a question of why we use this model, and leading to the discussion and the conclusion and policy implication regarding this paper. We could observe that if I would like to answer this question, let us go first and to go for and to make some sort of insight in order to find justification for this research, that is the banking sector in the United Arab Emirates countries. If you go there, you will find that the growth rate, it is about 4.6%. And at the same time, if you go to the equity market, you will find in the equity market, that is the range of change, that is the number of the listed companies, taken Abu Dhabi and Dubai financial market, it is not more than 140 companies. Then if you go to the debt market and the equity market, you will find very good justification to study the relationship between the financial structure and the lending behavior, as well as the performance of the banking sector, that in the debt market.
Shireen, can you mute your microphone? Yes, thank you.
Apologies.
Sorry.
The total number of banks operating in the UAE financial market, 59. The national banks, taking for example, it is equal to 21 national banks. The relationship it is 1 to 1.8. But if you take the size of the banks, you'll find the size of the national banks is very large as compared to the foreign banks. But within the national bank, there is inclination towards merger and acquisition. This is another, yes, it is beyond the research paper, but it is, again, it provides a very strong justification why we go to explore the relationship between the financial structure and financial performance, and in between the lending behavior of the banking sector. But the most important thing, if you would like to study this relationship, we have to go to the banking density ratio in the United Arab Emirates. You'll find the number of the branches of the local banks or the national banks, that is 21 banks. It is about 981 branches. And the number of the branches of the foreign banks, it is only 170. Coming
Dr.
to
Dr. Sayid, do you have control over the presentation? Because the slides are not changing. So if you're controlling, please move with the slides so that all participants can follow you.
Clear this point? Okay.
Yeah, now it's changing, yes. And I don't know where you are in the PowerPoint presentation, but your speech should follow the slides, please.
Exactly, okay. And again, at the same time, if you would like to go for the total assets, you will find that the growth of the total asset about 6%, and the growth of the deposit is about 4.9%. And this is a question, the relationship between total assets and equity, which is a question of the capital adequacy of the banking sector at the same time. Here, out of this one, we will find the performance of the banking sector during the period between 2008 and 2018. That is before, that is the period between the international economic crisis, that of 2008, and before this COVID crisis, we'll find the performance of the banking sector in the United Arab Emirates. It is 11.5% if you take the profit margin, but if you take the average to the income is equal 1.6%. And at the same time, if you take the Basel Accord, you'll find it is equal 17.33, while according to the Basel Accord, it is supposed to be 8%. That is a question, actually. That is a question of the capital adequacy in relation to the financial resource. And if you go to the average liquidity ratio of the banking sector, you'll find it is almost 33%, which is very high. Here, if we would like to address this issue, then we come to the under two questions. Question number one is to examine empirically the relationship between the financial structure, because the financial structure itself, that is, we found and we observe the financial structure of the conventional banks and the financial structure of Islamic banks. And you observe that there is no difference at all between the conventional and non-conventional regarding the financial structure. The second question, the question of the efficiency and the question of the effectiveness, because we use three measures. That is return on total assets, return on equity, and the profit margin. And under the return on equity, again, we examine it again twice, because the return on equity itself is supposed to be a question of interaction between the profit margin, asset turnover, and equity multiplier, which in another way is supposed to explain and to say this is a matter of interaction between the return on total asset and equity multiplier. And we found that under this one, that is what we are going to do out of this one. And what is the theoretical justification of this work? We try to explore and to find the question why we want to research. And what is the literature gap here in this area? And we explore the relationship between the financial structure and performance. And we found it is quite debatable area relation to the key performance indicators and the component of the financial structure. And then the lending behavior and performance at the same time. And we examine the lending behavior and we found there is a gap here regarding the lending behavior of the banking sector in relation to the performance. And again, you found this together, that is try to put this, what type of the model are you going to use? We select two models, either to go for the fixed effects model or to go for the random effects model. And we found justification exactly. That is the fixed effect model is quite suitable and quite reasonable and quite appropriate in order to explore the relationship between these three variables. That is from the decision. And this is supposed to answer the question of the methodology of the decision. Here
again, Dr. Sayid, excuse me for interrupting you. The slides do not follow your explanation, and could you please put it in full view like a PowerPoint presentation. Please, because I'm getting requests from the chat room to do so. So if you can put it in a full screen, slideshow.
Okay. In order to go for the question of how, we start first by the theoretical model. We selected 8 banks out of 21 banks. And why we selected these 8 banks out of 21 banks? Because we think about the size of the banks, and we have 3 banks are Islamic and 5 banks non-Islamic. This one thing. Second, we take it again in the period that is between 8 and 18. And then we go for, out of this one, we'll find the result that is descriptive statistic for this one. And taken again is the lending capacity, the profit margin, the return on total asset, the return on equity, the total deposit and the size. And the statistic here you'll find, for example, the mean and the median and the maximum for all. When we go to the variable, that is, we have a number of variables. The return on assets, the return on equity, the profit margin, the total debt over total assets, the change in lending capacity and the lending capacity. Then we go and the finding of this research, we prove there is very strong relationship between the financial structure and the performance of the commercial banks. This is one thing. But our contribution regarding this research, within the financial structure, we found very negative correlation between total debt to total asset, that is the leverage ratio, and the performance, which is again is the capital structure theorism, which is proved to be, that is supposed to be positive relationship. Second, we found a very positive relationship between the lending capacity, availability of the resources, because the lending capacity is the question of the total financial resources minus the reserve. And we found there is very strong relationship between the lending capacity and the change in the lending capacity and the performance of the banking sector as measured by return on total asset, return on equity, and the profit margin. But at the same time, we found some sort of variation between return on equity and the return of assets, return on asset. Despite the fact that the return on equity, it is a matter of return on total asset time equity multiplier. Because the equity multiplier in the banking sector is the UEE is very high. That is taking total asset divided by equity, which is almost sometimes it is 0.5 under this one. The study shows that there is a high degree of similarity between the conventional bank and Islamic bank in relation to the total financial resources, in relation to the total lending capacity, and in relation to the performance. And we found that the time deposits in conventional banks is very high and is very significant as compared to the Islamic bank. And this is telling itself the concept and the policy for the Islamic bank, which is established in many countries, including the United Arab Emirates under this one. The second point that is we found under this relationship, that is there is very negative relationship between the technology used in the banking sector and the banking density ratio. because the technology used, it is about 15% of the total asset. Despite the fact that the BDR in the UAE banking sector, it is almost equal 1.2 with a positive deviation of 20%. But if you're going to use a better model, that is taking the technology in relation to the total population, you will find the banking density ratio, it is almost 2. And this is a question, and this is sort of finding leads us to the policy implication. Policy implication in relation to the banking density ratio, the use of the technology, the investment in the banking technology, and the management efficiency and the efficiency of the bank and the effectiveness of the bank. Thank you very much indeed. I can get you actually.
Dr. Raed?
I am sorry. Thank you, Dr. Sayid, for your presentation and for managing the time. Let me move directly to Dr. Salim with my sincere apology to you for having called on you earlier, and then we found out that Dr. Sayid has the floor. So please, Dr. Salim, you're an assistant professor at Al University, and you talk to us about the customers' acceptance of e-banking in light of COVID-19 pandemic. We're all ears. The floor is yours, sir. And if Dr. Sayid can relinquish his control over the screen, will be.
Hello,
Salim, you have the floor, please.
I'm trying to link to. I'm trying to put the presentation.
Dr. Sayid, may you please stop sharing? Dr. Sayid, can you please stop sharing the screen?
I can't get you actually, unfortunately. Maybe the network, I don't know.
Can you stop sharing the screen? Stop sharing.
Okay, and when he share, okay.
Thank you.
Welcome.
Dr. Salim, you have now control over the screen, I hope.
Yes.
Yalla.
Can you hear me?
Loud and clear.
Can you hear my voice?
Absolutely.
Thank you very much. Thank you. First of all, I would like to thank everybody for the organization of this important conference. And the title of this presentation is Customer Acceptance of the E-Banking in the Light of COVID-19 Pandemic. The case is going to be focused on Oman. The presenters is going to be myself, Salim Al Hajiri, and also I've got along Dr. Abdul Ghani and Sayid and Muhammad Ali Akour. So this is the people who share with me. Okay. I will start with the problem of the customer acceptance of the banking. The money bank industry still lags behind in keeping up with the full adoption of e-banking technologies in delivering its services. Nevertheless, the spread of coronaviruses also created a huge challenge for the banking industry in Oman. So all of this we have noticed through the closure of many places. The bank itself also, they temporarily closed their branches and moved to the online. So therefore, the aim of this current study is actually we need to examine bank customers' perceptions in Oman considering the COVID-19 pandemic. So specifically, it will attempt to identify the three main dimensions that have major contribution to e-banking acceptance. In an attempt to understand and to address this objective, we have looked at we're going to highlight some of these points, which is okay. I'll just shift it to the introduction. So we're going to introduce the subject.
Dr. Salim, may I ask you to please do a slideshow so that all participants can see clearly the presentation. Thank you so much.
Okay. So in order to address these points, we're going to look at the introduction, literature review, methodology, findings, and also the conclusion of this slide. Yeah. So we'll start with the introduction. I would like to just give a very brief about Oman. Okay, Oman has got a population of 5 million people. Oman also has, as I think most of the Gulf, they're facing the drop of oil and gas revenues. Also, the Omanization nominal GDP was noticed that it's going down. Weak domestic demands, and most of the consultants, they expect that the economy to even contract even further in 2021. Okay. So therefore, the era of technology advancement and development of business global fund, okay, it was found obliged to upgrade their operations to some degree in their technologies. And this is what we're going to see, and in addressing most of these points, by looking at the criteria of the customers, okay, and try to examine them in the field of e-banking. Okay, so in order to address this, we have looked at the literature review, considering four major theories. Okay, so in order to address these main aims, or this main aims, we studied the literature review to review these, and it was carried out to understand all of this broadly. And I will not go in details of this. I think most of you can go through it and identify this. Okay. Although many studies have demonstrated robustness of these models, however, there has been several criticism on these models for their inconclusive and mixed results. The current study focused on the e-banking services, and the focus was on customers' perceptions in terms towards using the e-banking in Oman. The target sample size was 200 respondents, and this was suggested in several studies. From a total of 200, we got nearly about 131, okay? And we consider them in our studies. The data were analyzed using a linear regression and one sample t-test. The dependent variable is the intention to adopt the e-banking, while the independent variables are perceived ease of use, uncertainty, relative advantage, facilitating conditions, and self-efficacy. Just to briefly highlight the profile, it is noteworthy that 34.8% we managed to got it from the Islamic banks, and 33.9% it was from conventional banking. From the test here, we were able to determine that perceived ease of use have a significant effect on e-banking service adoption, also facilitating conditions and self-efficacy. The other two variables, such as uncertainty and relative advantage, they were not really considered here because of their results. From this table that we have here, also we managed to find out that there is a significant intention to use e-banking services, as what you can see here, and this t-test. The findings, the findings, we found that the result revealed that high tendency customers in Oman to use e-banking services, as what we shown in the t-test. The findings also indicate that perceived ease of use, facilitating condition, as well as self-efficacy have a positive, significant effect on the e-banking adoption. But we find that a negative significance on the uncertainty and also relative advantage. We have not found any significant effect on the e-banking adoption within the Omani banking industry. This drives us to the conclusion, which is the last slide. So really, this paper contributes into many ways, okay? And I would highlight very quickly on this because of the time, okay? This study is and actually extends on the TAM, a model that we have addressed at the beginning of this slide. The current study also provides insights into the, giving guidelines to the practitioners and policymakers into the important dimension of the e-business adoption. Also, the banks, we would like them to consider the customer perspective in this study. So furthermore, the authorities are required to put logistics and laws and policies into a picture, and also looking into a safer method in terms of implementing the system. Also, we recommend that future studies to look into the sample size and maybe also to generalize the results, and even to explore maybe even similar settings in this area. Yeah. We also recommend that the findings to be extended maybe to other countries. A major contributor here, as we mentioned, that if this could be segregated as a sample or analysis separately for commercial and Islamic banks, I think that will bring more, even broader insights into the whole subject. Thank you very much.
Thank you, Dr. Salim. Thank you
for the time
and your time frame.
Thank you very much.
I would suggest that we move directly to Ismail for his comments, then followed by Q&A. Then I'll come back with some concluding remarks to share my own views. So Ismail, my friend, you have the floor. In Arabic.
I'm sorry? Okay. I am not going, you said something in Arabic, right? I don't know what you said, but I've been learning Arabic for the last 20 years, but I'm not going to attempt to embarrass myself, so I'm going to stick with English now. So before Raed becomes real brutal on me, let me try to keep my comments brief, and also for the other reason that I don't really understand most of these great works. So I'm just going to pretend that I am going to be quick because Raed would be brutal on me. So the first paper, I'm just going to go in the order that we have the papers in the agenda, in the schedule. So the first paper is the financial structure paper by Sayid Abbas Ahmed. So this paper, as I can see, and I don't really understand much, but it seems like it is trying to find bank performance based on certain independent variables. And we have 8 banks over 11 years. And I can see from the paper that all these 8 banks over 11 years are merged together. So they're lumped together, pulled together. And I understand the authors are using panel data, so there's some pullability there. And I claim no expertise in panel data. And I will leave it to the authors to decide whether the dependent-independent variable relationship is acceptable. However, what I see is that the interpretation of the findings are pretty late, and also interpretation of some of the statistics, coefficient, R-square, etc. And authors are using fixed estimation model in panel data. There are tests, of course, to justify fixed versus random effects model. So I'm not quite sure if authors have done that. By the way, I read their paper, but it was a couple of days ago, and I have the shortest memory in the world, so I cannot remember whether they justified it. But I went through the paper. For example, the tables 9 and 10, 9, the 10 I think was missing in the paper, does correlation analysis between dependent and independent variable. So I kind of find it unnecessary in the sense that once you have already done the regression analysis, why are you going back to justify the dependent and independent variables inclusion? That really is not quite reasonable to me. And instead, I would like to see a correlation analysis between independent variables, but before you do the regression. That is the only way I can tell those variables do or do not have any correlation among themselves. I'm talking about the independent variables. And that's the only way to justify an econometric study. So that is one thing. Second, table 11 gives us descriptive statistics. Again, I think this should have been way before to talk about descriptive statistics. And now, I think we have to be selective about choosing statistics because the version of the paper, probably very preliminary, I understand that, but has all kind of statistics, and we should avoid that. Only we should be very choosy about what statistics we put in the paper. And again, I understand this is an earlier version. I'm just warning that just having the software output completely transferred into paper is not acceptable. And so, by the way, in the statistics, authors give us statistics for all 88 observations. Now, all 88 observations come from 11 years. So we have a time impact there too. Unless you justify poolability, lumping all these variables together and coming up with a mean, max, mean, etc., is not acceptable. So discussion and policy analysis are very important. This is an important topic, obviously, and I would be interested in seeing the final paper as just fun reading for me because I really don't know much about the area. Second, the next paper is paper 9, customers' acceptance of e-banking given the pandemic time. Well, again, this is really not my area of expertise at all. By the way, I'm not revealing that I don't know anything. So obviously, behavioral features in technology adoption, as it is in the paper, is very, very important. Given that we're moving in the direction of a different lifestyle, where we have to rely more on the technology, I think this is a very important paper in that sense, and whose results will be very, very important for the policymakers. Now, description of variables. Now, I'm not quite sure if these variables are consistent with literature because they obviously come from a survey analysis. Again, I am no expert on survey analysis. I suppose authors made their due diligence to ensure that the descriptions they use in the paper are fairly and reasonably reflecting the surveys that they have run. So the authors did linear regression, and I'm not quite sure I saw the post-estimation analysis. Again, my memory is too weak, and I read the paper a couple of days ago, so maybe you have done it and I forgot, which is perfect possibility. But I'm kind of perplexed about t-tests after linear regression. So I didn't see the point. Again, that may be revealing another lack of knowledge on my part. But once we have multivariate linear regression analysis, what is the point of running t-tests? Because those t-tests are univariate. And obviously, they will not reflect a multivariate relationship as it is in your paper. So I would really, I would avoid them unless you guys have some justifications. I would conclude with this by saying that thank you. I can imagine that your findings will be very useful for practical and policy purposes. The last paper is paper 10. I think this was presented even though the first paper. Obviously, by the way, as I see, this is a practical paper. Obviously, the CPI is extremely important. In the United States, 70% of GDP from the expenditure approach is on the household consumption. In the UAE, this is roughly 50%. So it's very, very, very important. But more important is the basket of CPI. As you know, the Boston report of 1996 already said that in the United States, the way CPI was constructed was problematic. Now that we have the COVID environment, I definitely like the suggestion that the authors or author, Ahmed maybe only, author makes, that we have to look at the weights of CPI. This is very important, especially in the COVID times. Obviously, the content of CPI basket has changed. Ahmed also talks about internet scraping, etc., to collect data. We have to do that. This is being done, by the way. There are papers, one of them that I am in the process of going through third revision of the paper about Amazon effect on prices in the United States, etc. So there, the current data collection is through internet scraping. And by the way, if you're thinking it's only US, you would be wrong, because, for example, there's a professor at Berkeley. I cannot say his name, so I'm not going to attempt. He collects data through internet from Argentina, I believe. So long story made short, I agree with Ahmed that those weights have to be revisited, definitely. There are other implications for other countries as well. Raed, if you allow me 1 more minute. Okay, I know you're going to be brutal on me, just 1 minute. The world is changing. We have a lot more migration, international migration, another topic and another paper that I am in the second round of revision. So obviously none of my papers make it in the first round. So there we'll look at the impact of Syrian immigration on Turkish prices. And one of the questions of the referee was, how come you find no impact, but then there are social perceptions? How do you justify your CPI? That's very, very important that we have correct measure of CPI. This has broad implications for future, and I thank all authors here. And thank you, Raed. I guess I can be off now before you become too brutal on me. Thank you.
No. I'm gentle. I threaten. I just threaten never carry my threats.
All right, thank you.
Ismail, for your excellent comment. You have been given really a very tough task to comment on 3 papers that each one needs some real understanding of the interests of the authors first, and then the methodology and the policy implications at the end of the day. So where matters concern Ahmed's paper, right, on the CPI, whether it's for Dubai or for any other statistical agency, I do understand your concerns regarding the 2020 type of a calculation. Now, the extent to which you actually make a compelling case for changing the weights now in a really after the shock of the pandemic needs to be questions at this time, right? Whether, because we're going through structural changes, whether the shock has produced transitory effects or permanent effects remains to be seen or experienced. And then maybe at that point in time, we'll be able to revisit the weights, revisit the components of that CPI. So until then, your call for a revisit is very well understood, very well motivated, but maybe its timing needs to await until we all can see the impact, the medium to long-term impact of the shock and on the spending habits of households. So that's one. Where matters concern Salim's paper, and please, I'm using this time to solicit more questions on the chat or Q&A platform, please. On Salim's paper, for those who followed your presentation, 90% of your respondents are women, 90% of whom are 20 to 30 years of age, right? So I'm not suggesting that this biased the results, but this is really in and by itself, right? Indicative of a number of issues, if you will, where matters concern e-commerce or commerce or spending in general, right? So this is an important aspect that I think you ought to maybe look into. Why is it so that 90% of the respondents are women and they're 20 to 30, they're 90% age of 20 to 30, and 40% of whom are actually hold a bachelor's degree. So this is a very, very important sample in and by itself to look into gender-related issues within the banking sector and e-commerce in general, or in particular, sorry. In Oman. Where matters concern Sayid's paper, it's really important to now maybe it's the fault of the chair who pushed for time constraint, but it's really important to look into the micro aspects of those banking institutions. With that, I mean not only their global lending assets but the quality. For example, most banks that you look into, what is their portfolio? In what sectors those portfolios are concentrated? And what is the quality thereby of those lending? And by the way, you reported an 11% profit margins from these banks. And that is a very respectable one. And that needs to be explained given the quality and the sectoral. It is my understanding there is a sectoral concentration of the lending operations, and of course that excludes most SMEs, even in terms of size, and then the quality, as I said. So with that, with those few remarks, I hope they'll be helpful to you in revising your work. And I see. Let me see. Are there any questions? In the chat room. Ahmed, your friend Arfan Hassani is congratulating you on a very good paper. So we will not accept friends' congratulations. We'll accept them, of course, but we will not take them as indicative of anything. So now I give the floor back to Sayid for 2 minutes, please, Dr. Sayid, and then followed by Salim, and then by Ahmed to respond to what you've heard. So please, Dr. Sayid, you have the floor, sir. well, awaiting for Dr. Sayid to deal with technical issues, connection issues. Ahmed, can you please respond to Ismail and most importantly to the timing of this proposed change that you talked about? Your microphone is muted, Ahmed.
Thank you, sir, Dr. Raed. So three things that I mentioned, and I think the proposal for this thing, I think if Dubai Statistics Center can afford to have a basket for 2020, then that will address many issues. Will address the issue of the coronavirus, for sure. And then the other thing is, will help us adopt the mid-term basket. The mid-term basket is, as I said, we always take 2 years back and 2 years forward, and then the 5th year will be right in the middle. So then we will get rid of that biasness. That's one thing. The other thing is the formula itself. When we talked about, we said we want a super relative price index formula. And then we suggested it is either Turkovich, we said it's expensive. Then we said we should move to the Swedish model. It is not expensive. It makes sense. It tackles the coronavirus issue. And I think for most countries who don't have that capacities like the US, I think they can move to the Swedish model, and then they can tackle the COVID-19 issue. And that's one thing. And with respect to the data collection, my suggestion is move to make some connection with Smart Dubai, get some transaction data. You can produce analytical CPI to come along with the CPI that the official that is produced now, and let us see the difference between the actual CPI and the analytical CPI. Until today, we don't know. So I think those three suggestions can help us make a big decision with respect.
I think yeah. The main test is for you to maybe if you have the required data, is to calculate it using your approach and see to what extent actually it differs from the one that is currently being worked on. Dr. Salim, you have a question that came online, and the question is, would you please mention how did you measure the intent to adopt e-commerce, e-banking as dependent variable in the model? Could you please do that in your intervention now? So you address the question and then also the what Ismail's comments focused on. Please. And unmute your microphone, please.
I think what I understand from Dr. Ismail is that he mentioned that why we use linear regression and at the same time use the t-test. Correct me if I'm wrong on this side. But if you look at the regression test, we have actually looked at the variables, as you can see down here. We've looked at the perceived ease of use, facility and condition, and self-efficacy. But if you look at the t-test, we have only focused on the behavior intention. Okay, so that's just to identify the intensity of the intention to use the e-banking service. So that was the main reason for that. Okay, I think also you mentioned also, just look at, I think you mentioned about the age and women, gender. I think that's the whole thing here. Actually, we didn't actually target anybody, but the people who were keen to participate, there were more women. Perhaps maybe women use the e-banking in that sense. And the age between 20 and 30, that's most of the people, they use, most of old people, they are not really into the e-banking. So that was the whole thing, yeah, for that, yeah. I really would like to thank you all for these very valuable comments today. I have learned quite a lot from both Dr. Ismail and Dr. Raed, and also the other colleagues. Also, I learned quite a lot, and I thank you very much. And I will look into whatever the comments that you have suggested, and I will revise them again. Thank you very much.
Well, thank you, Dr. Salim, for your answers. And just a note for everyone, anyone who's above 30 is considered to be old, all right? So we're all old people now. we will talk offline, you and me, Dr. Salim.
Yeah, that's a good.
Listen, I hear that Dr. Sayid is having, continues to have technical communication issues. Let me thank him for his presentation, his participation with us. Let me thank you all for being patient with me and for, well, I would say managing the session within reasonable delay of 15 minutes. So thanks goes to you, all of you, and I hope to see you all in good health and in good spirit soon enough.